John Jenkinson, happy and honored to be with you on this Veterans Day. Let's go to the corn market here first and go through all of the grains. We'll visit with Todd Horwitz at Bubba Trading. We're down 2 1/4 on the December contract. All of these contracts anywhere from 1 3/4 to 3 3/4 cents high, on the lower side for the corn market. Now the soybeans, they are on the weaker side as well. Soybeans really struggled on the overnight and even got more momentum to the downside during the day trade. January soybeans down 10 3/4, the March down 10 1/2, and the May is down a dime even. There's also weakness in the Chicago wheat market as well, with December down 2 3/4, 507 1/2. We're getting close to that low of 505 1/4, but we've got about a nickel and a quarter cent trading range here. July Chicago wheat down 2 1/2 pennies, 521 1/2. And if you're thinking about pricing some of your Kansas City wheat for the new crop, well, December is up 2, but the July is down a quarter at 445 1/4. So we got mixed action in the Kansas City wheat market. All right, Todd Horwitz is here with us. Todd, first of all, we've got I like your background there. Happy Veterans Day to you. And so do we have much to go on here with some of the government offices closed, a lot of the banks closed here today?
Good morning, John, and let me just say happy Veterans Day to all our veterans. You know what? It's very quiet. We have reversed in corn. I'm on the negative side of corn right now. I think soybeans and wheat are right there. 920 in January beans, 505 in December wheat. If they break those levels, it's probably going to reverse me out and make me, go to the dark side of these right now. I mean, again, I'm still really a big fan overall in general. But again, the tape action, the price action says that right now they still want to go lower. Now, again, it could be the lack of action. It could be the lack of offices open. There could be a lot of reasons. But one thing we know for sure, price doesn't lie, and the price action does not look very good right now.
Okay, fundamentally then, is there still a story to tell, maybe going to the higher side, but we may not know that till January?
Well, I think there's a great fundamental story that we go higher. Again, I'm not a big believer in all the reports that we have. From the reports that I get from people that I talk to, we're going to be short this year a little bit, and we're not going to get anywhere near, we get within 75% to 80% of what we thought we were going to get. So to me, that already signifies one issue. So I think that there's going to be some issues. I think that, again, I think the bigger story here really from the grain standpoint is just that the new money is flowing into equities because they continue to chase the equity market higher. So the excess money that might have flown into the grains is just going back into equities because, again, it goes up almost every day. Everybody's chasing yield, and that's where the money is going right now. And I think that's what's really crimping and keeping the grain markets lower. What
do you tell a producer then when they're trying to weather storms like this where we see a pullback in these markets, Todd?
Well, what I tell them most likely is hopefully they're hedged. But if they're not hedged, I say, look, you have to make the decision. If you can store yourself without cost. Again, we have to remember that we can't add costs. Already we're in a problem. We don't want to add more costs to a problem. If you can store on your own property and your own land with no cost, I'm storing. I'm not selling here. I don't see the point. Okay. But again, if you have to pay for storage, then what I tell them is I say, look, I think we have a great chance to go higher, which I really believe, although I'm on the dark side right now, but I do believe we have a great chance to go higher. I would say you want to be in, get long the board and get rid of what you got to get rid of, because if you have to add cost to what you have in your pocket, there's no sense in holding on to it.
Well, and Todd, you make a good point. The end users have got to be looking at this from another angle. We'll talk about that when we come back on the other side of this break when we talk livestock. That's straight ahead. Stay with us. We've got more coming up right here. Well, even though some government offices are closed, there still are some reports coming out. And one of those, of course, would be the cutouts. We do not have the beef yet. That's been delayed a little bit, but we do have the pork cutouts for today. Let's go over these. The carcasses up 73 cents at 83.40. Loins up $1.39. The hams down $2.35. And that belly market on a rally. In fact, this rally started last Friday. We're up $5.48 today at $124.19. Friday, we were up over $6. Let's look at the fat cattle market here. Last week, we traded anywhere from $1 to $2 to $3 higher. Now we're starting to back off a little bit on these front months here on the live cattle. December down 10, February down 3, so not by much, but the April's still up 43, the June's up 40. January feeder cattle up $1.03. Now see here, we've backed off here also, 146.90 after getting up to 147.45. March is at 146.38. That is up 88 cents a hundredweight. But that still leaves us a little bit shy, 42 cents, in fact, away from the high. And now looking at the hog complex today, this hog market all the way across the board is lower right now. December down 73, February down 55, April down 67. Seems like this hog market, Todd, is still just kind of waiting to see what we hear from China. What are you hearing on China news this morning?
John, I really don't believe that China has anything to do with this. I think that you saw the original spike on the African swine flu months ago, and I think that that's over. And again, right now, I think that they're going lower. Now, again, I'd like to say they're going higher, but we're underneath resistance. We've been consolidating, and the action's been really wild, right? It's been moving $1 to $2 to $3 every day. So it's going to do something here. Now, again, I think eventually it'll break out. You can look forward, and if you look at the formation, it's a very bullish formation. But right now, December, which is typically a little bit weaker anyways, looks like it could go a little bit lower until it's got to break and hold over 67 before we continue to go higher.
Okay, now the tough question, and I hate to toss these hard questions at you, but this cattle market, at what point does this thing finally blow off the top here and start back? You know, that's anybody's question at this point.
I think there's a lot of room to go on the upside, John. I mean, I've been bullish, as you know, since the Tyson fires, and that was almost a gift when everybody panicked out of here, and we've continued to break out every level. You know, right now, I thought we would back off on both fats and feeders, which I wrote Thursday night, and because, again, we're right at resistance. But I think we just made new near-term highs in both, and I think they're going to make the next level, and I think fats go to 125 is in the cards, and feeders over 150. I don't see anything that's going to get in the way of these right now that will slow down the overall price movement we're seeing. Again, remember, price determines action, and the price action is extremely bullish and looks really exciting here, like we're going to see much higher prices.
Todd, it's always good to visit with you. We'll talk to you again tomorrow. Todd Horwitz, Bubba Trading, and he is in Redwood, Illinois, there in his office.
All right. Thank you so much,
Thank you,
John.
Tammy.